Welcome everyone. Really excited about this conversation today, right? And in the theme of 100 days, I wanted to talk about the last 100 days, right? I think all industry analysts, right, who track the global services industry, the entire demand and supply side, including us, have been talking about, a revival of total discretionary spend coming back in this quarter, right? Again, we saw 2024 was a challenging year in terms of budgets being constrained, but the demand and the need for digital transformation getting ready for AI was not going to go away, right? And I think that need still stays, but the fundamentals of the industries have kind of taken some bit of a U-turn, right? In terms of the overall macro environment being slightly more challenging than is an understatement, right? We That's why if I look at the overall uncertainty in the environment from an economic, macro, and also the client sentiment perspective, I think the word of the year for us right now is uncertainty, right? So the degree of confidence we had when we started the year versus where we are is somewhat different, right? And we want to kind of unpack that with all of you, answer your questions as we go along, and have a great conversation. So Prashant, why don't you get us started?
Hey, thanks, Ronak. Hello, everyone, and thank you for joining us today. Um, so I'll start with a very interesting quote, right? A three-time Formula One champion, Ayrton Senna, he said something quite interesting which caught our attention, which is you cannot overtake 15 cars in sunny weather, but you can when it's raining. Well, his was in the context of course, Formula One racing, Grand Prix, and so on and so forth, but we can apply it anywhere, right? And what we thought was that let's apply it in the services space, technology and technology services space. So had it been calendar years 21, 22, the questions would have been quite different, right? Enterprises would be asking where to invest more to push their transformation agendas, and for service providers, the questions would have been where to maximize the benefits of this rising wave of spend, right? Now, we are not in 21, 22. We are in the year 2025, right? It's not just raining. Ronak, it's fair to say it's a downpour, right? So I think in this downpour, it becomes quintessential to understand what gears and levers you should be pulling to get ahead of those 15 cars. So that's what will be our agenda today. There will be few things which we'd like to uncover for you. There will be few levers and gears, as I said, which we would like to highlight as enterprises and providers of service, which you should be pulling, right, from our perspective. So before we get into, truly the opportunities part of the equation, let us take a pause to appreciate the turmoil of past 100 days or so, right? And that 100 days would be appearing a lot in media and social media, right? So just in terms of numbers, right? Let's understand the second half of calendar year 24. It showed all promising signs of growth. So what you see here in front of you is a chart of growth of a set of 19 major global IT and business process service providers. Their growth was definitely on upward trajectory toward the second half of 2024. What we, as Ronak also said, uh, what all the industry analysts were expecting was a recovery, right? So the discussions were not around if the recovery will happen. The discussions were more around how much time will it take for a complete comeback of growth. Will it be abrupt recovery like the one coming out of COVID times, or will it be slow and steady recovery, right? So all of those good discussions were going on when this happened. Well, we all understand the fast nature of announcements and all the flip-flops of policies and so on and so forth. What it has done is it has created the effect for tech and tech services, buyers and providers of services alike, having low visibility in the future, right? It has been kind of hampering any concrete plans which anyone wanted to make the beginning of the year or end of last year. So just to give you point of evidence, right? When we interviewed around 200 plus enterprises, Amy and team did that uh, at the end of calendar year 2024. Well, there was a unanimity of optimism, right, across enterprises. Well, of course, cost was definitely one of the central agendas, right? 24 was not very easy. But at the same time, we could see a certain turn towards optimism. Enterprises were thinking of how they could and where they could increase their spend, right, to maximize the ROI from services. And service providers were also planning around that. Now, if we just fast forward it 100 days, right? Amy and team ran another survey very recently after all of this happened. And the results, actually, why don't I just invite Amy for this? So, Amy, you have been closely working with enterprises and understanding the agenda evolutions, right? So it would be great to hear your perspectives. Would you say that the recent survey outputs were expected or were a surprise?
Well, I think that's a great throwback to what we heard at the end of the year and when we entered 2025, where there was a lot of uncertainty, but optimism that we had ways to overcome that uncertainty. Those headlines kind of showed what we've been living in the last 100 days plus, and we all live in this world, so I don't need to tell anyone that uncertainty and perma crisis and new news every day has kind of become the norm. I wanted to jump into some of the results that we saw over the poll that we ran just in the last couple of weeks. Also, some of the conversations we're having with our clients and our contacts in the industry. And this comes from companies that are both, all types of companies, right? Product companies, services. I think a lot of people like to think that the tariff impact is limited to product, and it is on paper, but it really trickles across the entire industry. So what are people doing? This was a little bit surprising to me because I do hear that people are in a bit of a wait and see mode and a bit frozen on their decision making. And what we see when we look at this slide, you'll see the red is kind of the reducing or considering reducing, and the green is the considering increasing or increasing on these various aspects. Near term, people are definitely scaling back, and we probably everyone on this call probably feels this in some way in their organization, that uncertainty in hiring, uncertainty in your near term budget. Do we need to freeze? We don't know if things are going to get better or worse before they get better. So we see a lot of in year 2025 scaling back or holding on things. What's interesting to me, though, is that there are significant increases still, or at least considering increasing on two of these areas. There's a lot of the green in the top, right? Long-term capital investments and capital projects, and what we plan to do in the next 5 years. People are still looking at either increasing that, or a third have actually increased their long-term investment, and even more so in technology. So that tells me that there's still long-term confidence, and most people view this as a short-term blip that we need to get through, and they need to hunker down, right, batten down the hatches for a little while. But it is fairly self-imposed, and I would say that it's a bit different view than what we saw 5 years ago. We're comparing this to very similar quick polls when we had COVID polls a few years ago. The COVID impact was hard to estimate, uncertain. We had no precedent, right? We've all been through recessions. We've been through trade challenges before, and this is a trade challenge that can be worked through. So that is impacting, I believe, some of the view on here. And it's also impacting the view, I think, if we go to the next slide, in terms of people's view on their supply chains, their offshoring, their outsourcing decisions. So this data was a little bit more focused on different locations decisions, or in-house outsource, make versus buy decisions. When we look at companies with a physical supply chain, they're obviously the ones directly impacted by the tariffs news, right? And the question there is, are they looking to reshore? Are they adding locations? Many of them are considering adding locations, but you'll see only 10% that said they actually are. And when I talk to companies anywhere in the manufacturing sector, this is pretty consistent. There's just not enough knowledge and certainty to start reshoring manufacturing at this point. There's little bits and you'll see things in the headlines, but as a whole, right, a lot of it's just not realistic. It takes years to build a factory. I come from the supply chain background. These aren't things we can change in 3 months. So we saw that 52% of respondents, more than half, said they're not actually planning anything from their supply chain perspective. And most are just considering something, but they haven't pulled the trigger yet. When we look at services, the last two, so offshoring services or globalization and outsourcing services to third-party providers, the story is different, right? I think what this speaks to is what we saw before 2025, which was a push towards more offshoring and more in-house centers and GCCs, and we'll talk about that a little bit later in the conversation. But we also see, the potential that offshoring of services, which are less impacted by tariffs, hopefully not impacted. A little hard to tariff services, and that's a whole other conversation. But so far, that's not expected. That's actually a lever for cost savings that could be, kind of a counterbalance to some of the things happening on physical goods. So we're watching to see where things go. But I think most companies that I work with are saying, we're not scaling back our offshoring at all. However, considering and doing are two different things. So we're kind of in that middle point right now, which is, I think, what speaks to a lot of the forecasts that you have, Prashant, for the industry, the services industry.
All right, so I think there's one question maybe before we get to the next one, and there are some pre-submitted questions here. So we have someone asking, is there a shift from globalization to regionalization, right? And is there a more focus on nearshore markets? So would you have a perspective around that?
Yeah, I do. I think Hrishi probably will as well, because he's seen a lot of this. But there's been a focus on nearshoring for the last several years. And I think that continues, but I haven't heard from clients that we work with that they're looking at, moving work, say, from India to nearshore necessarily. It's been a continued push towards more of a hybrid model that gives more flexibility.
Right, Amy.
I
And
think
if you see the middle bar there, that answers that there is an increasing focus on offshoring and not globalization and offshoring, rather than moving services to centralizing services to onshore or nearshore.
Yeah, for sure. I think there's one more slide in this, and really looking at, the question about tech earlier, but was I made that point. But what we really see is that companies have been investing in tech, or they're counting on technology actually to overcome a lot of this macroeconomic uncertainty. As we move to the next era of service delivery, we view technology investment as one of the levers that will shift the way that work is done, right? And we can talk about that in much more detail. Some of that investment has kind of slowed in scale, but the investment is still continuing. A little bit of wait and see there, but I think for the most part, looking at Gen AI, looking at agentic, looking at how that's going to be implemented and displace labor in some cases, but also accelerate the way that work is done, and augment people. We still see that is one trigger that can help you get through this uncertainty. And I think that from that perspective, while you may see some areas on pause a little bit, there's still overall a longer term, a lot of optimism around tech investment.
awesome. That's actually, there's a lot reflecting also on the outsourcing services, as you earlier described, Amy, and there'll be no justice in forecasting just one future scenario with the ongoing policy level flip-flops. So what we have essentially done is we have come up with 3 scenarios, or with many in between, but these 3 matter the most, right? So if you think about it in terms of what we have done is we have just taken the tariff and the DOGE and the important policy changes which are happening now, right? We have created 3 scenarios. In our worst case, we assume that all the tariffs which were implemented, say in April, which were announced, the retaliatory ones as well, they will come in full blow at the end of this 90-day pause. Our best case is more like, all of them will go, only the 10% slab, which is continuing, will continue, and all the negotiations will keep on, will yield the positive results. The base case in this case is where we anticipate that, say, on an average, half of them would have a bearing, right, on the businesses. And we have just gone ahead and tried to ascertain how these scenarios will play out for discretionary spend of services, right, as well as the non-discretionary. So, because in case of non-discretionary, think about it, it also is a matter of how they get, linked to the GDP and the volumes and so on and so forth. So these are the three scenarios which we thought would make most sense. I think if we look at the latest developments, I'm sure we are away from the worst case, right? A lot of discussions which are going on. We are gradually at least moving towards the base case as we speak. So we do have come out with our growth forecasts for outsourcing services industry. But before we disclose our growth forecast, we want to run a poll, right? What better than to have the understanding of our participants in this? So assume that calendar year 24 was a growth for outsourcing services to be plus 1.7%. Where do you see the growth to land? 25.
So it's interesting the way the responses are shaping up.
Yeah, this is. I, I think I can see the pessimism going down and optimism going up at some level on it. I don't want to color them, but it's
Yeah, no,
interesting.
good. Yeah. We'll just kind of, give another 10 seconds for folks to respond.
Yeah.
Yeah.
Yeah, I think there's no right or wrong answer. I mean, we are all dealing with the same set of uncertainties, right?
Well, we have a crystal ball.
Yeah.
Oh, you, Prashant?
Absolutely.
Yeah.
Awesome. I think this is great. I mean, I think we are all trying to be conservative, or we don't want to take a bet, and we are landing at this 1 to 2% range is what I can see here. So,
Yeah.
Ronak, what do you think? What do you think?
Yeah,
How
no,
do you read the results?
so at least I'm not surprised that there are very few people who are talking about this being a less than 0% market, so going down. So that's good because yes, we have seen a challenging 2024. Coming back on this, the comparables are in the favor. So seeing this average in that 1 to 3% is where the majority of the folks are, which seems to be the direction we'll be taking. There could be some positive upsides, which I'm hoping, right? And we should talk about that also later in the day today. But I'm hoping some of these upsides in terms of AI as a whole, but also what we are seeing in terms of the transformation appetite kind of increasing. I'm hoping some of that kind of pans out. So I'm more optimistic than what the numbers are out here. But again, good to see the response from the group.
Yep, no, I think this is good, right? At least I can see some optimism. Less than zero, so little. I mean, this is very encouraging, right? So let us kind of, see how we did against your expectations, right? So if you just move to the our forecasts, this is what we think, right? We belong to the optimistic lot. So the folks out there who are in the upper half, there we are with you on that, right? So at a worst case scenario, we are anticipating at least a growth. We are not at all expecting a decline this year, right? While from 1.7 there will be deceleration in the worst case, but we are more gravitated towards the base and the best case, right? And there are a couple of reasons for that. The primary ones being, of course, there's a base effect in play. So 1.7% last year was on a strong base of 3.5%, where 2023 was still, first half at least, was showing good demand, right? Now, when we move ahead, you have a base of 1.7%, which is kind of works for itself. The other thing is bookings. So throughout the calendar year 24, we have seen very solid bookings, right? And Ronak, I think you would agree when I say that a lot of those bookings were done very meaningfully under cost transformation, cost agenda, which were here and now. They
Yeah.
had to spend, and enterprises had to spend. They were very confident on those agendas. And we have started seeing some of those playing in the first quarter, right? As we see the results rolling in for service providers, we can see that those bookings are coming into picture. So I think we would believe that if at least it will be 2.5%, right? We will still be a bit more biased on the upside of that, but that's where we stand, right? So I think with those, just in terms of numbers, let's dissect our expectations in terms of major segments. Now, we have a peculiar way of categorizing the major segments of the industry. We call them leaders, middlers, and laggards. Leaders and laggards, we all know. Middlers are something which you think that, they are around the industry average growth. And these are all based on our forecasted numbers, right? So needless to say that some of the heavyweights, the bigger segments of the industry like IT services, North America manufacturing, these are the ones which fall under the laggards category because they are directly exposed to the ongoing macro dynamics. But there are a lot of interesting segments which are emerging as leaders for us, right? And I would like to invite Ronak and Rishi in this case. So, what are your comments on some of these segments, Ronak?
Yeah. So again, if I look at from an industry's perspective, right, Prashant, as you mentioned, I would agree, right? There are some of these segments which definitely get hit because of tariffs, the overall supply chain challenges, and also everything going around us. So that creates a bit of a push towards that. We do see, I would say, a bit of a revival in financial services, specifically pockets of insurance, commercial banking, wealth management, payments. So that's good, right? So that activity is coming up. So is the case in the technology side, largely because of the spend in AI and data and all of that work, right? Those are good, right? So those are good signs, and we want to look at the positive out here. I'll let Rishi comment on geographies, but if I look at services and segments, right, I think this is where it becomes very interesting because there's so many of these different segments as a whole, right? And we want to talk about all of these in detail, but if you think about broadly, right, product engineering, right, the innovation and R&D that these companies need to do and the speed at which we need to build new products and infuse a lot more software and AI into our physical products, that is not going to slow down, right? So if you look at all the investments that we are seeing in AI-powered physical devices and how that is shaping up, will continue, right? Business process as a whole, yes, there are challenges on certain pockets like contact center, but at the same time, industry-specific processes, clients do need a lot of help because the complexity is increased, compliance mandates are changing, so there is a definite need for help in terms of business process as a whole, right? But Rishi, I wanted you to comment on GCC specifically, and what are you seeing in that, right? We've been running several assessments in that area as well.
Right, Ronak. So sticking to the segment, so GCCs themselves, they are witnessing a very strong growth, right? There's a wave of GCC setups. And what's interesting is this is accompanied by the desire to partner with providers to drive GCC growth. And hence we are seeing a lot of demand for GCC related services. And similarly, if you see some of the other segments like mid-market, AI, these are also witnessing tremendous growth, and we expect this will be leading the growth going forward. Similarly, if we look at geographies, well, some of the traditional geographies like North America, it's seeing some, it's featuring within the laggards, but we are seeing strong demand from emerging geographies like Asia Pacific, Japan, Australia, right? Similarly, countries in Latin America, Middle East, Africa, those are the key pockets where we are expecting high demand for services. Right?
Yeah. No, I agree. I think Japan, and you mentioned Middle East, and I would say even countries like South Africa, we are seeing a good activity, right? So I think I'm hoping some of the optimism also for us comes from those geographies, right? As these companies expand their global services footprint and put the pedal in terms of driving certain acceleration in the transformation activities, they should make up for some of the slowdowns that we observe in the North America region.
All right, no, that's and we will be coming back to some of these themes
Yes.
in detail as we go ahead with this, right? Before we do that, let's do one thing. Let's take a step back to understand the situation, right? Was it very hunky-dory even at the end of calendar year 24? No. Even on removing the last 100 days, from the equation, the services demand and supply had its own set of challenges, right? We'll all agree to it. That's why 24 was a year of deceleration itself. Now, those were, of course, affected by a lot of those geopolitical and macro factors, which were anyways playing out across the world. So what we have done is we have tried to segregate the two, right? So there are some additional elements, some delta factors which came into existence over last 100 days or so. And what we have done here is we have tried to categorize them under discretionary, non-discretionary, competitive dynamics, and of course the sourcing part of it. So if you think of discretionary, it was not like calendar year 24 ended with a big discretionary demand, right, in the books. We were still questioning when will it come back, but at least the question was, will it be delayed? Will it be now? So I think what has happened over 100 days is that it has definitely gotten pushed out, right? It's fair to say. What will be the next of discretionary? I think in terms of, if you truly think about it, what a term which has emerged towards the latter half of last year was cost transformation, right? So there will be decisions by the enterprises, which will be discretionary decisions, but they will be more towards how to optimize their costs, right? And I'm sure agentic AI and automation and those themes will continue to be part of it. And then, of course, agentic AI in itself, and Ronak, you'll be touching upon it, I know, right? You are the expert there. So that preparedness in itself is something which will see some discretionary pull, right, in calendar year 25. When it comes to non-discretionary part, this is the one which pulled majority of demand in 2024. We think that this is continuing in 25. The delta will be, the pricing and contracting itself will see some bit of more pressure, right, as we see the year unfolding. And of course, how do you see this moving forward? There'll be higher ROI expectations. And what will define the value is kind of end-to-end solutioning as we see that the IT and ops motion comes together. Uh, when talking about competition, right, yes, it was intense in 24. We think that this is gonna get more intense in 25, right? And the way service providers will be dealing with some of these would be, you know, how will they think of few ways, right? So one or two ways which we are seeing is the partnerships with ecosystem providers, right? The partnership with tech players, how they're elevating their game, right? How are they working against the competition, so to say, with these partnerships? How are they developing their scalable AI capabilities, right? And then there is, of course, the last element of sourcing, where Amy and Rishi had shared some points, but actually, Rishi, what do you think? I mean, in terms of sourcing, do you think something has changed if you bring in last 100 days in the equation?
Uh, Two things which are impacting Prashant. One, on the onshore side, the visa stringency that is leading to constrained supply of that will lead to constrained supply of talent in the US, right? And if we look on the other side, on the offshore side, there is rise in offshoring as we saw before as well. And then the GCCs are now also acting as a strong competitor for talent. So overall, what the market growth will be slightly muted. The demand for talent, especially skilled talent, is going to stay. Like it's not going to be easy to hunt for talent even in this market.
Yeah.
Yeah, I would agree with that, especially as it pertains to AI and digital skills. Those are the skills that we're most hearing from enterprises that they need to find, and what is the model for that, right? It's not quite figured out, but I think we'll see some of those impacts more muted maybe than we have historically when there's a talent shortage, not like what we saw in 2022 probably, but still an ongoing need for more offshoring, more competition among GCCs for that talent.
Absolutely. And I think we have one interesting question, right, from the audience. Does the current US administration policies towards immigration look to impact the labor market for resources coming in the US? Right? I think that question we have faced, we would all agree, right? Uh, my perspective on that is more around, it's not new, right? Trump 1.0 administration had similar restrictions. I think it's just wait and watch. You must appreciate that since 2017 till now, the service providers have built enough onshore capabilities, right?
Mhm.
The subcon costs have gone down. I mean, a lot of things are being managed from offshore as well. So while yes, H-1B definitely creates some degree of uncertainty, but given that there's no definitive progress on that front, we still feel that while it will be a matter of concern, it's not going to change the equation per se as yet. So with that, now I think spent a lot of time here, but I think we have come to this, right? What are the opportunities? So, well, I mean, a lot of questions, enterprises asking, how to extract the maximum ROI, how to navigate the scenario. Service providers are also asking, where's the money, right? So if you think about it, Ronak, you have been working with a lot of enterprises and service providers, right? And do you really think that there are some oases in this desert of uncertainty?
Yeah, absolutely. I think, Prashant, there are a few areas which we are seeing, and I think we already teased that a few slides back, right? So I wanted to focus on four key themes today, right? So the one is, yes, a lot of the services industry conversation has been about, okay, what are the largest of the enterprises doing when it comes to sourcing, offshoring, and their investments? But there's a huge mid-market opportunity that we see for the service providers, technology providers. So we want to talk about that. The second we want to definitely talk about is, how the market is shaping up in terms of the high growth geographies. Rishi gave us a good view early, but we want to double click on that. Then the GCC opportunity. I know that seems to be counterintuitive. How is this an opportunity for providers? We definitely see this to be a very big opportunity for providers. So we want to talk about that. And then everybody's favorite topic, AI and agentic AI. So we'll talk about that. But before that, why not take a poll, right? Again, Prashant, let's talk. Let's see from our provider audience today, right? Again, the ones who are joining us, where do you see most of the growth coming from, right? Are there any areas that you see more investments from your end in terms of your go-to-market, in terms of how you're approaching areas where you're building solutions, hiring people? Do let us know in terms of how you are seeing this.
All right, so now we can see a lot of people aligning with what you
Yeah.
just said, Ronak.
Mm.
They see, of course, I
It's
think.
it's honestly, Ronak, it's a tough choice between these four.
Yeah, no, but it'll be good to see, right, from a provider audience as they reply to this, where do they see, growth coming in? I'm I'm not that surprised because, Rishi, what you mentioned, right? These are going to be competing priorities, right? As we look at the results, AI takes the top spot, right? I wouldn't argue with that. Right? So definitely, right? GCC takes the second spot. I think very close, right? Again, GCC as a whole and then mid market as a whole takes the second spot. So that's good, right? Again, definitely these are big opportunities as we see. So let's double click on that, Prashant. Let's talk about mid market, right? Because this is one space we want to do a justice to it. So if you look at the market as a whole, right? And again, this is a very good chart to kind of bring that into perspective. If you look at the services industry and if you look at the revenue, where do service providers get their revenue in terms of large enterprises, mid-sized enterprises, and small enterprises? One thing that we continue to see was the growth has come majorly from the large enterprises, which means service providers have ignored this middle market as a whole, right? There hasn't been a lot of attention being put to it. And I think this is a missed opportunity which needs to be corrected. And that is where, as we look at the market as a whole, and Prashant, if you move to the next slide, we wanted to kind of bring the emphasis out here, right? We took two big markets, right? The US and UK. And we said, okay, let's look at how big is this mid-market professional services, right? Everything from IT, BPO, engineering, consulting, right? How is this market? How big it is? It's a significantly sizable market, right? And a faster growing market, right? So when we are talking about growth in the range of 1 to 3 or 4% or lesser than that, this is much higher, high single digits. And I think that is what makes us excited about how we see of the mid market, right? Definitely, mid market firms have very different needs than the large enterprises. They, their scale, the penetration, and things that they need are much different. And obviously, it's a different scenario across industries, right? So if we look at you know, RCPG, retail, consumer goods, industrial, right? Again, insurance, chemicals, these are the areas where we see, and even healthcare, right? The wide healthcare payer market and the banking market, right? So if you look at it, right, these are good segments that we see. Banks, obviously, there are 3,000 plus banks just in the US, and a large portion of them is in the mid market segment. So definitely these are strong segments that we see out here. But Amy, I know you've had a great run of experience of working with a lot of mid market firms. What's been your experience and how do you see this shaping up?
Yeah, I think that the data you have here is pretty compelling, and what we've seen in practice is that, the rapid growth in mid-market and the need for additional outsourced services is just increasing. It used to be that working in this space, the primary consumers who really needed, support and advice around outsourcing, offshoring, and service provider intelligence was large, global 2000 companies, and we were very focused on that. That's changed. As we talk to smaller firms, they are growing. They have strong growth forecasts, strong strategic plans, and they're not doing that with internal hiring, right? They need partners to help them in that growth. So looking across all of these industries, it's clear that some industries are going to be, faster growers than others. That's just the nature of our economy right now. But I expect that this is an area that the service providers on the call, as well as you and I, will be doing a lot more work and advising with in the next couple of years.
Yeah, and that's a big option. I think our audience also align with that, right? Now comes the least preferred child in this case, right? And Ronak, what do you think?
No, and again, I think this is just, I think the nature of I think the sample set that we had, right? Because if I look at these geographies now, some may argue that, hey, these have always been growth geographies. What has fundamentally changed? But there's things which have changed, right? One, um, each of these countries investing into building local capabilities, right? Be it R&D, be it technology, and driving large scale transformation, right? Be it in their banking infrastructure, in their energy infrastructures, to their manufacturing capabilities, to their supply chain, to transportation. So there's so much of spend, right? Be it Japan, right? Be it KSA, right? With their 2030 roadmap. All of these firms want in all of these countries, right, want to build more deeper capabilities. And I think that is what is driving this, right? So we actually are very bullish in terms of the way things are shaping up across these emerging markets, and they're going to drive a bulk of the growth, right? Definitely the base is small when we compare with the likes of North America, UK, Europe, but these are going to be high growth pockets. So providers as a whole, you should definitely watch out and pick your bets into where you will invest in terms of building people capability as well as your sales and go to market effort. So I think this is one piece, right? But Rishi, I do want to come to you again, right? I think the hottest topic right now is GCC, right? It's the talk of the town. So I would love to get you are a seasoned expert in this space. So what are your point of view on this area?
Yeah. So let me start with the numbers, right? If you see the chart on the left, the value of services which GCCs currently deliver, that's currently estimated to be 100 billion, and it's growing at a fast pace, expected to reach over 150 billion by 2027. Now, at the same time, what is new and interesting is the desire for GCCs and enterprises to partner with providers on all aspects related to GCCs. And what we see is as we speak, providers are supporting GCCs with services at the market size estimated to be 20 billion and expected to double in next 3 years to 40 billion, right? What GC, and if you see, a majority of the current share of services with providers are supporting on the right, that's majority is in the GCC operations. However, if you see setups and transformation, those are the ones which are witnessing significant growth. There is a strong desire from enterprises to partner with providers, be it on GCC setups or on GCC transformation. And let's get into each of this subsequently if we move to the subsequent slide, Prashant. Right. So what there has been a wave of GCC setups. For example, in the last 2 years, more than 600 GCCs have been set up. But still, you'll be surprised to see that if I take Fortune 2000, 65% of them do not have a GCC yet. And these are strong contenders for a GCC setup in the next 2 to 3 years. As we spoke with a lot of these enterprises, close to 20-25% of them are planning to set up a GCC in the near term, right? And even if I look in the past 2 years, more than 60% of the setups were by enterprises which did not had a GCC. So there's a strong fear of missing out, which is getting to a lot of enterprises setting up GCCs to tap into the potential of GCCs, right? And there is a trend, the trend varies by industry. For example, technology, communication, healthcare, life sciences, they have adopted GCC to a larger extent compared to RC, retail CPG, or a BFSI, where the adoption is still low. And we are seeing, and then specifically, if I talk about BFSI, you would have seen a lot of growth in GCCs by mid-segment BFSI firms, and that's an area that we expect to grow. Right. And as the setups grow, what we are also seeing is that there is a strong opportunity for providers to support on these setups. So if you see on the next slide, right, of the total setups, of the total GCC setups between the last 3-4 years, approximately 50% of them were supported by a provider. Now, this is a significant shift from pre-2020, which was close to 25-30%. So there's a strong desire to leverage a provider even for GCC setup, right? And within that also, there are different models in which enterprises are leveraging providers for a setup, be it a big operate transfer or a BOT, as we popularly know, assisted captive, or a joint venture. And what we're seeing is a increasing shift towards a big operate transfer, while joint venture seems to be losing the charm. Now, multiple reasons driving this. A, partnering with a provider helps you accelerate the overall setup process, setup journey, right? And especially talking about BOT, there's your upfront financial commitment, right? And there's a lot of ease of setup when you are partnering with someone who has the local market knowledge, who has the local market know-how. So that's driving GCCs to partner with provider or enterprises to partner with providers for GCC setups. Amy, you have also been interacting with a lot of these enterprises looking to set up. Mm-hmm. So what do you see has changed?
Yeah, it's really quite been an interesting shift for those of us who've been around a while in the sourcing, in the procurement space. It's always been kind of make versus buy, right? And I used to work with a lot of companies, still work with a lot of companies where it's, we're going to do this in-house and it goes to the GBS, shared services, whatever, that part of the business, or we're going to outsource this and it goes to sourcing and they run a process. And those were fairly bifurcated. That's no longer the case. When we look at the people we're working with, it's often a workforce strategy, team that's thinking about this. And then in practice, it's, it's both groups that need to have a hybrid model. I think the business need here is that we need to have the flexibility of a hybrid model where we can decide on a more of an ongoing basis, what are the right things to do in-house or with a provider, right? And that might change not, year to year. It might change week to week or month to month, right? Most companies aren't really historically set up to deal with that agility. So that's a shift we're seeing. And what I think it means for a lot of the people on the line who are not at providers, the enterprise people on the line, is that you really what your role used to be 5 years ago or 2 years ago has changed, and you need to be working in an agile way. And just because something's going in-house doesn't mean that you don't need to do figure out which provider is going to help you with that. And vice versa. If it's, it's outsourced, doesn't mean you're not going to have a GCC. I hear from a lot of the vendor management teams actually that we work with now that are saying we're going to measure our GCC the same way we measure our providers, and they're all going to have the same performance management process. And I think that is the right thing to do for a business, and we need to think more about how that plays out, especially in a world where technology is going to change what we have to measure in our providers.
Yeah. So it's no longer an or equation, but rather an and equation
It's
between
an and.
GCCs and providers.
Yeah.
Right?
Hybrid has a
And
new
if-
meaning. Yeah.
And even if we move beyond setups, even for the existing GCCs, as they look to grow and move up the maturity curve, what we see is then again there is a strong desire to partner on GCC transformation across technology, talent, operational efficiency. And that's an area where we are seeing an increasing demand. We expect that to grow exponentially. Like we spoke with a number of enterprise GBS leaders, and GCC transformation was one of their top priority of why they want to engage with a provider in their entire GCC journey.
Yeah.
Right.
And folks who need help on the call in terms of their GCC strategy, please come to us. We have detailed peak mid assessments across all of these. So definitely that's a plug for all of us. And talking about plug and not talking about AI is going to be very detrimental. So definitely let's talk about AI and everybody's favorite topic these days, right? Agentic AI. There's so much of buzz, right? So much activity happening. Every other conversation that I'm having these days cannot be done without AI, agentic AI, right? Even all the events right now. So I'm sure our audience is also hearing a lot of this. Um, I think that at the data level, yes, this is a fast growing market, right? Nascent market, but maturing really fast. This is the next stage of evolution of how generative AI is going to get into the enterprise. And we already see that the initial estimates put this to be growing at almost at 150% and will continue with that 100% kind of growth rate over the next few years, right? So this is going to be at a speed that we have never seen before in terms of the growth of the technology. But the big challenge that I still hear from all my enterprise clients is, hey, we are doing a lot of this in the fringes of who we are, but we aren't being able to do this in the core enterprise. So operationalizing AI in the enterprise is the big challenge that all are telling us that here is an issue. And I think the fundamental challenge out there is our systems are not ready. And when I mean by systems, I just don't mean our systems of records, our systems of engagement, but also the people, process, data around it is not ready to adopt it at that stage. We have seen a lot more of data intelligence dashboards that are already available to all of us at in our firms. I think the challenge is a lot of that data and intelligence is inert. You have what we call as a scarcity of agents, right? Both human and AI agents that can take this intelligence and act on it, execute on it, right? And a system that is capable of executing on them. That system is systems of action, right? The ability to kind of make this execution happen at scale, the ability to kind of move from the concept of automation to more autonomous actioning systems, bringing the power of human and AI together in each process so that we can make decisions and act on it. And solve for this gap between intelligence and execution is all about systems of action, right? As the AI technology, specifically agentic AI technologies matures, we are going to get to that stage. But let's be real, right? This is a process first conversation. It is very important to understand a particular process, the goals of the process, and how do you have the inputs that are going into the process and the output that are generated getting orchestrated to systems of action. And I think that is going to be very important as enterprises as well as providers. For each process, we need to activate the data in the process, make sure we are creating the decisioning intelligence at every step of the process, making sure we have process orchestration layer so it's driven by workflow guardrails, and make sure it is secured and compliant, right? And I think that is where systems of action comes in, and that is what we want to achieve when we look at this space, right? Prashant, let's move to the next slide, right? Right, and Rishi, do you want to talk about this?
Yeah.
Yeah.
So we do have an offer for our service provider audience here, a 30 minutes complimentary session with our SMEs on your areas of focus. So you have so you would see on the chat there is a link where you can share your preference around any specific geography or industry which you want to us to cover with you, and we'll be happy to have a 30 minutes complimentary session, picking the details on that industry. How do we see the services trend for that industry or geography growing? How does that competitive dynamics look like? What are the key forces in play? So go ahead and share your, go ahead and pick your preference, and we'll be happy to connect.
All right. So, speaking of competitive intensity, right? We have been talking about it. Competitors within service providers, they are moving fast, and a continuous discussion with them underscores the agility and nimbleness they are bringing to their strategies, to their offerings, to the way they are engaging with their enterprise clients. So what we do is, again, data, just to support our analysis. We break the group of service providers, the major service providers, into four major segments. What we found is that the mid-sized players, the smaller ones, they are the ones who have been growing fastest, while the infra heritage ones are the ones which are growing slowest. So, with the mid-sized ones, what we've realized over past 12 to 18 months is that, they are the ones who are kind of leading the pack because of the agility, right? As I was speaking about, they are more aligned to the client agendas. They are focusing heavily on their existing account. They are doing very effective account management. They are doing very, kind of holistic kind of specialization in their offerings for their enterprise clients, right? On the other hand, the Indian heritage service providers are the ones who kind of have been helping enterprises to navigate their cost agendas over 2024. So these two segments have been doing better than the industry average. When you come to consulting heritage, right, these are the ones who are most impacted by the discretionary pullbacks. But the interesting trend which we have observed over last 12 months is that a lot of these players have kind of pivoted to leveraging more managed services, right? And they are kind of moving in different directions to hedge some of their discretionary bets in their portfolio. So, and of course, if you think about the recent earnings, the first quarter results are almost out for all the players. You see that there is certain degree of cautiousness in their forward-looking views, but things are not falling off the cliff, right? And that's exactly what we were talking about. A lot of the bookings which are already in place, they are playing out. The providers are, all of them are cautious, but at the same time, they reported fairly okay results, right? They're moving sideways compared to the December quarter, right? So I mean, these are just the numbers and the positioning. I think what becomes more important is, what are the forces which will be shaping the competitive intensity, right? And this is where, I'd like to also invite Ronak and Amy for some of these. But let me quickly touch upon a couple of them. I mean, the first one is freeing up of capacity. This is very transactional, right? The Doge has absolutely crushed some of the existing deals, which is kind of releasing a lot of bandwidth, supply bandwidth for service providers, and that's gonna come into the competitive landscape picture, right? Speaking of pricing, number three is something which, the pricing wars are still on, as we call them, right? It's kind of sometimes it becomes unfortunately raised to the bottom, as we call it, right? Which is counterproductive, is what we believe as an organization, right? We appreciate the appeal of throwing the kitchen sink, right, in these challenging times, but it's more about creating value, right, for your clients versus anything else. And that brings me to the client satisfaction agenda, right? So, Amy, I mean, you have been
Yeah.
working with a lot of SVM. So, what do you think? Does this play out?
Yeah, I mean, our data, we get client satisfaction data through a lot of different sources, but all of the surveys that we've done and the feedback buyer interviews show that client satisfaction is mediocre. If anything, it's definitely not going up, right? It's a big challenge. And I think that that needs to change. That may even be driving, you know, the boost in GCCs, right? If I can't get a provider to do it what I need, I might as well do it myself. That's a natural business reaction. And I think that potentially does tie in with number three, this unsustainably low pricing that we often see in deals. We try to be objective in working with clients to say, you know, that pricing might be a little, if it's too good to be true, start questioning it before you sign the contract. I think that's a mode that we need to be in the near future. Ronak, I know you see some points here as well.
Sure,
Any
no.
comments from you?
Yeah, happy to come in, right, Amy? I think the AI point that we made, we do believe it is important to be at the cutting edge of the latest technologies and making sure that you are able to bring it into the context of the customers, their processes, their industries, their domain, their data, their maturity. So bringing it in the context of customers is going to be very important. And as I said, operationalizing AI in the enterprise through systems of action is a very important point that all providers need to start looking at, because that's where your clients are going to go. We do see a lot of new suppliers, or I would say categories of suppliers, the competitive intensity increasing. Private equity firms and other investors are putting a lot of money into this market because they see AI to be a strong tailwind in the long term, and that's where they're investing into this segment. So is the the big fours, right, be it Deloitte, EY, others, who are investing a lot more in building capabilities to get clients ready from an AI perspective and drive the transformation. So the competition scenario is going to change. It's now or never to drive that differentiation. So Prashant, I'll give it over to you last minute. Let's sum this up.
All right, so let's quickly look at what a prepared service provider looks like, right? This is the last section, and there's some elements which we believe are quintessential for a successful service provider. You've got to focus on your base account growth. Don't leave them high and dry. Partner with them, right? Partner with your existing clients in a more strategic fashion, right? That's gonna pay. The gold is in the garden, right? As we call it. Leveraging ecosystem partnerships is equally important. It's not just about appealing in the platinum or a diamond list. It's more around how you elevate your positioning with your partners, ecosystem partners, right? And how you go to market together. Uh, you should prioritize, as we have been saying again and again, value over discount. That is absolutely necessary. It's too good to be true. I mean, if you're like really undercutting yourself, as Ronak has already talked about, think about architecture, right? Lead with a process-led system of action solutioning for AI for enterprise clients, right? And last but not the least, these are tough times. You got to be leading with empathy for your enterprise clients, right? So be willing to empathize, right, and invest in your clients, because these are the times which are truly testing for a service provider, and we are in strategic partnership between the buyers and the providers of service. So these are a few elements which we believe that a true prepared service provider who is geared up to to lead those 15 cars in this downpour should be looking at. So with that, I will just open the stage for Q&A. If there anything else, Rishi, are we seeing any questions from the audience who have joined us?
Yeah, so let's do this, Prashant. I know we are running out of time, so we'll take all the questions that are coming offline. You know where to reach out to us, and we'll take those questions and come back to you with an offline response.